Hello, 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 everybody. It's really good to see you all here. Welcome, welcome, welcome. Thank you so much for joining us for this really, really amazing webinar with two really great managers and at this point friends, from the Decile Group community and some of the top participants from the VC Lab Accelerator. My name is Mike Supervici. I am the co-founder of Decile Group. If this is your first time joining us on a webinar like this, we like to make these ultra interactive. So feel free to introduce yourself in the chat, say hello. There's also a Q&A button at the bottom of your screen where you can sort of ask questions to the panelists and things like this so that we can make sure that we can make this really interactive. If this is your first exposure to sort of Decile Group, VC Lab, and everything that we do, um, in a nutshell, our entire purpose of existence is to help new and emerging managers thrive and be really great at their craft. We do that through training. We have a program called VC Lab that has launched over 900 venture capital firms to date. And we do that through a set of tools and systems that provides all the right compliant and ethical infrastructure for venture capitalists to really thrive. What we want to do though, and this is the primary way we sort of kind of give back, is we do a lot of these webinars every single week just to be able to sort of teach the market on how to do things right, how to understand where the future is going and things like this. And this is why, we like to feature top performing managers from our community that are generally doing really well because you can learn a lot from them. Okay. So what's going to happen here today is that I am going to spend a little bit of time running a panel here with Garrett and Nathan. Okay. And then what I'd like to do is to start taking all of your questions for them. So if you have questions, feel free to sort of put them into the Q&A there at the bottom of your screen, and then we can go ahead and sort of start taking your questions for you. Okay. So without further ado, I'd like to first introduce Garrett. Garrett, do you mind just saying a few words about yourself and what you're working on?
Sure. So great to be here, Mike, Nathan. Nice to see you. Super excited to share a little bit more about my background. So I'm the managing partner of Reef Haven Ventures, and we are focused on early stage medtech. So looking to back transformational opportunities for healthcare founders. My background, so I've spent the last 20 years in the medtech space. Started out as a PhD in bioengineering. Then I moved into starting companies. So I was an entrepreneur for about 10 years or so. And then I moved for the last part of my decade into venture. So I joined a corporate venture capital fund and also Johnson and Johnson. So I have this experience of uh, learning what it takes to translate something from an invention through building a company, doing things the right way, many times the wrong way, learning how to invest and deploy capital into early stage companies, and then also this piece of, well, how do large companies evaluate smaller companies for partnering or ideally purchasing or acquisition. And so it just makes total sense that for me being an investor, because I can bring these different avenues together. And I'm super passionate about working with founders. That's what I love to do. And so yeah, just really excited to now have a fund. We've invested in three companies to date. Only started this 6 months ago. So huge shout out to VC Lab to getting us this far too.
Yeah, thank you so much for the kind words, and what a great time to sort of go after this sort of opportunity. Nathan?
Hi, everybody. Great to see you on this webinar today. My name is Nathan. I run a fund called Basel Capital, also recently launched through the Decile Group in one of the VC Lab cohorts. In terms of my background, I've been a three-time entrepreneur and been an angel investor since 2019. I'm really just love the early stage part of the entrepreneurial ecosystem. I get a lot of energy out of people's creativity and out of people's tenacity, having done it three times myself, twice in the blockchain space and once in the AI space. And so my fund is focused on fintech and AI. And I've just really found it to be really rewarding getting to work with these early stage entrepreneurs, both in terms of helping have an impact on the world and also financially. So I come into this having done a ton of angel investing, seen pretty good returns on my angel investments, and I'm rolling that into this fund where I really love backing repeat founders at the very earliest stages I can get conviction on.
Amazing. You too, man. Just the timing is just about as great as it gets. Maybe I can just stay with you for a second, Nathan, on this one, and just and I'll ask you the same thing, Garrett. But like like kind of like the aha moment, right? Like what kind of like led you to be like, I'm gonna go and like launch a VC, like how did that come about? Like obviously you've done this, what made you say, hey, I want to go and professionalize my angel investment practice and start a VC, Nathan?
Yeah, for me, it was having a lot of success as an angel. You know, seeing something that you enjoy doing and having financial returns is always a good sign to keep investing in it. So I actually met a friend who was running a small fund maybe about 6 months before I did VC Lab. And he was just really pitching me on, you don't have to go out and raise the largest fund in the world to get started. You can really start small. You can, do something that really builds off of what you've done. And I said to myself, this is something I'm going to be doing, with or without a fund for the next 10 years. So the worst case, I'm not able to raise a dollar, but I've just built a stronger community for myself. And best case, which is, closer to what's happening, is I've now launched a fund, done a few investments in incredible companies, and am building a new chapter in my career.
What about you, Garrett? Like, you touched a little bit on sort of like your trajectory, but you still also had to have some sort of aha moment to say, okay, let me just put this all together and actually do my own thing. You want to talk about that a little bit?
Sure. I mean, I think the aha moment was like I've been really intimately involved in entrepreneurship at UC San Diego. That's where I did my PhD. Started an entrepreneurial program there a number of years ago that's still going. And there was an opportunity to really partner with an accelerator, a medtech accelerator at UC San Diego. This opportunity just kind of presented itself. But similar to Nathan, over the last 10 years or so, I've been really active in doing angel investments, and that's something I'm really passionate about and have also had some traction on. So I think it was a mix of like just the right opportunity and the right mix of yeah, just the right mix and timing, and then also having longstanding interest in investing and supporting entrepreneurs.
Super cool. And like let's just stay on that a little bit. Like, okay, so you had sort of like this aha moment, you're like, okay, let's go ahead and do it. But then you're like, why do you think that yeah, you can like perform better? Like what is it about sort of like your strategy that you sort of kind of got like all together as part of this process? Maybe it was through VC Lab, maybe it was even before that kind of just it made you really feel like this is going to give me a huge advantage right now, and I got to go ahead and do this now.
Yeah, so I think a couple things. I think the first is that just having like founder operator experience is super important and fundamental to how we can add value to our teams. So I have had two exits in the past, so and I've seen what it takes to build these companies. Another element is I've been trained in this framework. It's called Stanford Biodesign Process, and it's really a full kind of 360-degree way of evaluating and de-risking medtech companies. So that's
Mhm.
really something, kind of combining this founder operator experience with some methodology. Really feel like that's an ability where we can win on, sourcing it, but also selecting the right deals.
Yeah, and before you mentioned this, and obviously Nathan has this too, but like why do you feel like the founder experience is really helpful in here for you?
The founder experience, oh, just
Yeah,
from my own career.
yeah,
Yeah,
just for you to get have an advantage and being able to be a good investor.
Yeah, I think so much of it has to do with empathy, and you've been in those same tough spots where you don't have the money, right? You miss the milestone, or you meet the milestone and it's a huge success, but then the next issue hits, and so I think understanding how the board operates, and when you can see both what I call kind of buy and sell side, uh, dynamics that really helps in how you can support the entrepreneur. So you can kind of decipher, hey, when your investor or strategic or whatever saying this is what they really mean. And I think that adds a lot of value.
Yeah, I agree. I
You get
agree.
it. Yeah.
I totally agree. How about you, Nathan? Like obviously you were like really successful, but you know, to do a fund, right? It's different now. You're like sort of operationalizing everything. Like how did you come up and how did you think about like your sort of edge and your real advantage as a fund manager versus an angel?
Yeah, Mike. I mean, I think being a founder is a huge edge, especially
Mhm.
someone who has had a big success in a specific industry. One of my best angel investments ever was someone came to me because I was successful in the industry they wanted to be in. And guess what? I knew how to assess that. I knew what the hidden landmines were. It wasn't just some sort of theoretical 10,000-foot view of, hey, I've looked at this market size. Hey, I hear this is trending on all the social media. But I knew like here are the three things this business needs, and this founder checks them. It was actually really funny, Mike. I tried to get my friends to invest in this company. I ended up like launching at about an 80x investment from what I put in. And I tried to get my friends to invest, and none of them would. They were all nervous and scared about it. And so that's sort of the thing where you can build really deep conviction on something that can do really well, even just because you have some different expertise and industry experience. So I think being a founder is huge. I mean, I'll say like there's a few things you really need to win at when you're, a VC. Obviously, access is one. Being able to win deals is another. And there's kind of like five things I always think about: access, picking, winning, portfolio support, and how you do exits. I'm not going to cover all five of those right now, but in terms of access and winning deals, if it's hot, those are two huge factors. And being a founder is a enormous advantage. Who wouldn't want someone who's been there before on their cap table if they can help you? And if you're looking at someone who you're trying to pick between a lot of competitive people, you want someone who's seen the journey.
Agree. Being on the other side too, for me, it's so much better, right? Just because of the empathy that Garrett has talked about. Obviously, having been through it and stuff like this is a huge, huge advantage. I agree. You know, the other, you mentioned, speaking of which, it probably helps a little bit with diligence too. You kind of touched on that a little bit, Nathan. Like your ability to sort of assess the sort of company and what it's doing. And so I'd love to get your thoughts and maybe just for the audience, like how do you, what, you can stay as high level or low level as you want, but like in your diligence process, how do you think about a company, and how do you get conviction that it can be one of these sort of like durable companies that can build and be a venture scale return for your fund? What are some of the things you think about when you do that?
Yeah. I mean, there are some obvious ones, like you need to have it be a big enough market so you can do some math and say this can, 100x or 30x or however many investments you're doing can at least return your whole fund. But some other things that I find super important, and they're very personal in terms of my fund. I don't know if everyone has to do these things, but having been a founder three times, one of the best pieces of advice I ever got from my mentors was if you're just really persistent, that's what kills most companies is just not pushing through enough of the challenges in the journey. And so one of the big things I always try and figure out is how do I assess the just like, does this person have an extraordinary level of persistence in what they're doing? And sometimes it's their past, sometimes it's on social media, sometimes it's questions and stories they tell. One founder recently told me a story of flying to New York to try and get this meeting, um, literally like breaking into this office. Maybe this isn't appropriate, but breaking into this office, not like physically, but more socially to meet with this one guy. He wasn't in the building when he finally got there, but getting another person's connection into that to this meeting to get this gym he was really excited about. So it's kind of stories like that repeated over time where someone is just um, ready to go through more challenge than feels comfortable. That's sort of the path for a lot of us. We all imagine it's going to all be smooth sailing as founders, but it's not a lot of the time. A lot of time it's really hard. And so that's just one thing. I can offer more too, but I don't want to ramble in case Gareth wants to add in, or also just to give you another chance to ask a different question or follow up in a direction you think is helpful for the audience.
I actually love talking to you about this stuff. So, but fair enough. Like, I would love to like hear Garrett's view on this too, and then we can kind of dive back into it.
Yeah, I think Nathan answered my first two uh, points, or what I would have said in terms of market size and founder resilience, just to kind of sum up some of that there. So I think that's spot on. I think the other maybe two pieces are, in healthcare, we're really looking for that large unmet need that's both large enough market, but in our case, we're looking for transformational opportunities where there's massive patient impact and improving patient outcome. So that's really our North Star for the fund. So we want to see that. And it's not always as obvious that these startups are actually solving the right problem or solving the right unmet need. So I think the second piece is that product market fit that is really important for us to see before we can invest, because we want to make sure that whatever that solution is, can actually match into that large enough clinical and market size. So I'd say those are kind of two additional things that we look for.
Everyone, if you've joined a little late, there's a Q&A button at the bottom of your screen. You might have to sort of expand your screen and put questions in, and you can sort of also upvote them. I see that there's a few that have already come in, so I'm definitely going to start prioritizing those very soon. But start getting your questions in. We really like to make these interactive. We're really doing this for you. Obviously, I can spend an hour and a half or 2 hours with both Garrett and Nathan, but I'd love to do it for you. And speaking of which, obviously things have changed quite a lot in the last year and a half. Obviously, like with the advent of AI and a whole bunch of things, but a lot of things have changed in general. And I'm just curious, and maybe we just start with you on this one, Garrett. Like, what like has changed, if any, in your like diligence process over the last, let's call it year or two, and whether it's like in the market, whether it's any sort of capabilities, whatever. Like, I'm just curious to know because this is, it's also helpful for the audience to see how you all are constantly evolving with the conditions on the field.
Yeah, definitely. So I think the goalposts for all the different rounds, if it's seed or Series A or Series B, I feel like they've been shifted up. So what we would see in a Series A many times is now happening at the seed level. So I think it's important to, at least that's in the med tech field. So I think it's important to understand much more now what's that next round of funding, or what are those next round milestones, so that you make sure as an investor you don't get caught holding the bag with next round of financing. So I think in our due diligence process, we're seeing that more and more, that we'd like to not only get in other investor opinion earlier to help us vet the deal, but also we really want to see engagement from strategics or larger companies at a much earlier level, and that will give us more comfort to know that there is actual market demand. So I think that's something we're doing more now, is not just doing due diligence with the clinicians or the regulatory experts or the reimbursement folks, but also more on the BD side with different strategics. Is this something that you'd be interested in? And that's simply because you want to make sure the company doesn't get stuck for the next round, or there's not a road to an acquisition or event.
Nathan, what are your thoughts?
Man, Mike, this is something that I think we're all trying to figure out. I mean, you take outside of the VC world, you just go into what's happening in the world really since January. Um, you know, I am connecting all my data sources together. Don't even need email the same way I used to need email 3 months ago. Like, it's crazy what's happening with AI. I think it's pretty impossible to really honestly predict what's coming down the pipe. But since we're here and we're having fun, I'll give you some of the things I am trying to think about. um, some of the things I think are really interesting to consider are, kind of like questions that help you AI proof your product or your investment. So one thing that I've recently heard that I liked was, ask if an AI agent had your database, could it replace your product in 6 months? And this kind of question really helps me think through a couple of key things: whether data compounds with every customer interaction, whether AI makes your product better than replaceable, and how embedded your workflows are. And I don't think this is the be all end all framework for AI, but I do think that you want to be thinking about, how do you not get one shotted by Claude or by Anthropic or by OpenAI if they come out with something new for the company you just invested in? And that kind of approach of thinking about, if someone had your database with this AI, what could change and how could it shift, does help get to some of that thinking. And the broader question really is, can AI as it improves make your company better, or will it replace you? So that's, I think, something we all should be thoughtful and cognizant of inside the context that it's really a wild world that we're literally just exploring these last few months. And I think the next 3 months are going to be continue to just be this kind of like the up trajectory of one of those S curves. We're just going to keep seeing a lot of new exciting things coming out. I had this crazy meeting recently where this founder told me they got into this accelerator program. They did like 3 months in that accelerator program and had worked on their company for another 3 months before. They had $10 million of revenue and got acquired before their accelerator program ended. So like things are just radically different than they were before, and we're all figuring out a lot of this together. So I'd be curious what other people are thinking about, what questions they have. This is an area I'm actively thinking about a ton.
Yeah, and there's a good amount of questions coming in, but before I get to them really quick, because I have to ask, like, how do you think about like pricing, when all this crazy stuff's going on? And obviously I want to hear from you as well, Garrett, but like how do you like obviously this is changing, but pricing's changing. You're in fintech and AI, very challenging, right? Like the sort of pricing situation there.
Yeah, I mean, pricing is tough. I think that the way I like to deal with pricing at the best level is to that's why I'm interested in the pre-seed side of things. I like to find people I've kind of a little different than Garrett maybe. I like to find people who are I have such high conviction on that I'm not so concerned about what exactly they're pitching me. One of my first investments for my fund was actually something I followed on from angel investing, and I didn't like the pitch they gave me when they angel invested me in terms of their product. But these guys had just floored me in terms of their kind of team and what they were doing and their backgrounds and how they'd find something eventually. Ended up being that they're one of the top YC companies of the last fall batch, like a year and a half later. So I think one thing about pricing is getting high conviction early, so you can get in at like $6 to $10 million. Another thing about it is just finding the founders who are reasonable. Sometimes people have pretty big egos and pretty highly confident about what they're doing, and just skipping it. I actually remember working with two people from Decile Group who help you review deals and do some due diligence with you if you have a start fund like I have, Neil and Connor. And they were like, you'll just figure out over time which hot deals you want to chase and which hot deals you don't. And not just falling into the FOMO, but really picking it when it makes sense and letting go when it doesn't make sense. So I'm willing to pay extra for pricing if I need to, but I also, have to let go of the FOMO and do what I think is right when I see a founder who has nothing yet and is raising at a crazy valuation.
Garrett, how do you think about all this?
I think similar to Nathan in a lot of ways, looking for high conviction opportunities where you really believe in the founder, you really believe in the mission more than that plus or minus couple million on the valuation. Don't get me wrong, you still need to get in at a good valuation, right? Or you're not going to get a good multiple. But I think the overall conviction in the company is most important. I would also say that in like early stage medtech, we don't see as high of crazy valuations. There's definitely like a creep, but it's not at the same level as like pure kind of AI plays, probably Nathan, than what you're seeing. So we still see some more reasonably priced multiple valuations rather, and that makes me feel a little more confident that we'll be able to get some decent returns because I do have some concerns. I'm sure you guys do too in terms of the valuation levels, high valuation levels, and will the large companies continue buying at the large multiples that they're buying at? And maybe that's up for debate. But I think being able to find good deals at good valuations in medtech, it's still out there. You just have to look for them.
Varun has a kind of related question for you, Garrett, which is like, when you do diligence, do you like actually set up calls with like strategics as part of your diligence, or do you go off their like sort of letter of support for medtech companies? Any th sort of thoughts on that?
Yeah, so it'll start more informally with our connections. So both my partner for Reef Haven Ventures and I both worked at Johnson and Johnson combined for 10 years. in BD. So you can imagine that over time, those professionals will go to other large corporates. So, it normally starts with, hey, we've met with the company, we've done some light due diligence, we're going to call someone specifically. And the idea is, does this align with your strategic pipeline? Are there corporate venture investments that are currently being done in this space? And so we want to get a sense of, ideally from one or two different strategics in that space that there is a potential buying signal, down the line, best they can know. So it's more informal. I will say though, in terms of LOIs, if there's a startup that does have an LOI or some type of research collaboration or partnership with a strategic, that goes even further.
There's a question in the Q&A here. And by the way, everybody, I see some questions coming into the webinar chat. Timu, I see you putting questions in there. We're not really following that as much, so just put them into the Q&A, expand your screen, put the Q&A and upvote things. So Zachary's asking, and I thought this was appropriate for you, is like, what are your thoughts, Nathan, on like, you on co-investors using the blockchain or just investors using the blockchain, and just how do you think about that in general, since you have a lot of experience there, obviously?
Investors using the blockchain, like funds being on the blockchain, or
Yeah, yeah, exactly. Or you, or maybe we can go into more like diligence, like, like, are you able to sort of think through, like, can you see if something's real or not by looking at like the infrastructure or whatever?
hmm. I mean, that is one sweet thing about the blockchain is it's a lot of it's public data, so you can
Yeah.
look at smart contracts that they've been deployed. You can look at transactions. There's whole swaths of people whose entire job is just being essentially detectives and seeing what's going on more than anyone really realizes. Excuse me. So yeah, that's definitely an interesting factor in terms of like actually the investment side. Yeah, I mean, part of my thesis for my fund is that for the first time in our lives, really, we're getting internet money in a way that's like super useful and cheaper, faster, and more accessible than what we've had before. And so I think it should be being used everywhere. I push, Decile Group to think about how do we use, USDC, USDT more. I'd
Yeah.
be so happy to never have to send a wire again. I mean, that is not a very fun process compared to what you see on some of these blockchain tools that are much better. So I'm really for it. Obviously, there are ways you have to do it safely, and there are things you have to consider. So it's always more complicated than just like gung ho enthusiasm. But I do think that there is a bright future using a lot of blockchain finance that's we're already unlocking today. I mean, it's crazy. Like every single day, we see insane announcements. Like the New York Stock Exchange is going on chain. Like almost every day, there's some really large new company that's launching a new coin or a new stable coin that's backed with a dollar or something of that nature. So it's a pretty wild time in that space.
There's a question here for me, which is like, what is the general core belief system at Decile Group? Look, our core belief system is that this next generation of ethical managers are going to fund the future, and they're going to see companies that no one else can see just because they're investing at very early stages. And those companies are going to solve the vast majority of problems that the world is facing. Case in point here, right? Like very different sort of theses here, medical, fintech, AI. Just that alone, the impact of just these portfolios with 20, 30 companies is going to be super profound. And that's if Nathan and Garrett don't raise another fund, which they will, right? And so if you just think about that impact compounds over time, and that's why we do what we do. There's a question here, which is, you know, uh, this is more for you, Garrett. Like, and Jeff, I'm going to take this to a little bit higher level because this is almost too specific here. But talk about CVCs, right? You spent some time there. Like, how do they sort of impact the ecosystem? How do they impact like sort of how you think about like your follow-on financing and things like that? I know that they play a pretty big role in healthcare and medical device.
Definitely. And, they're playing even a bigger role these days. So, actually, our first investment as a fund, we co-invested with Kyocera, which is a Japanese strategic,
Mm,
and we got to know the team pretty well. And what we liked is that they really understood the space. We understood it's an orthopedics related company. We have some operational experience in orthopedics. They sell products in orthopedics. But to be able to partner with them with their level of due diligence, like on the commercial side, and actually being at the table to hear how they evaluate the trajectory of the company, that if it hits certain milestones, FDA approval, early sales, there could be commercial opportunities, so to speak. So that provides us with a lot of strength, I think, in terms of making an investment decision. What you do have to be careful about is that oftentimes the strategics and corporate venture groups, they're more focused on the actual, strategic impact as opposed to financial impact. So when you're, and I mean that because these companies are more interested many times in rolling up these startups into their portfolios. They may not be concerned about the multiple on the investment, right? So you want to make sure that there's enough finance. This may be getting into weeds, but you want to make sure as an investor on our side that there's also enough opportunity for the financial upside and also potential optionality with other strategics if for some reason it doesn't pan out with that one. But I would say overall, like especially in the early stage, I find it appealing when an early founder has already developed a relationship with a strategic, and then there's opportunity for follow on, right, and potential even acquisition.
We got a little bit of a loaded question here for you, Nathan, which is basically like, there's a person here that's basically talking about like AI and maybe we're in a bubble, and yet, obviously Cowork launches things and sometimes it's putting entire sort of startups out of business, potentially, right? It goes like really kind of people go crazy on this on X when Cowork launches a thing. Things feel sort of inflated and all that. Like, just any kind of advice on how you navigate all this stuff and all these different trends?
Yeah, definitely. It's as I said before, it's pretty bubbly in some ways, pretty really revolutionary in other ways. And so you kind of have to have your own opinions when you're investing on how you're seeing all of that. And for me personally, I think, could AI be bigger than the internet? If AI was bigger than the internet, how far into that transformation are we? And how do I act accordingly? So, I think there's a lot of potential for a bubble to happen in some sectors and some parts of AI and for things to go wrong, and it most likely will. But at the same time, I think that there's potential for things to transform even more than we've seen today. I mean, if you think about all of the companies trying to implement AI, a lot of them aren't even that far along in their journey yet. So, what are we going to see in the future? And so, to me, it's just about having a perspective. Personally, my perspective is to try and separate out areas where I feel like it's very noisy and bubbly. Being in San Francisco, it's nice if you go to hackathons for enough times, you'll start to see the same ideas emerging again and again and again. Those are the bubbly
Mm.
ideas. Everyone's seeing an obvious problem. The less bubbly things is when you get deeper into someone's workflows. This company I mentioned that exited in like 9 months, they were working really deep in the dentistry space. And so, how do you go really deep into something vertical? How do you kind of do something that is going to be harder and harder to unwind and really accelerates and grows as AI gets better?
And just asking, is being maybe like in a regulated industry enough of a barrier here, or is IP critical? Like, I don't know. What are your thoughts?
Yeah.
Personally, I don't know. I don't I don't know if it's enough of a barrier right now.
Yeah, I mean, I think everything here, personally, I feel like I make plenty of mistakes as an investor. So everything I'm saying is my personal thoughts. I don't think that I'm always right by any means. But as regulations come in, there are ways that those can help companies, and there are ways that those can hurt companies. One of my favorite examples in the area of the blockchain I'm really excited about, stablecoin infrastructure. There's a company that 40x their revenue last year called Rain. They
Mm.
do credit cards that are on top of stable coins. So if you have a digital dollar called a stable coin, you can get a credit card and spend against that. And they 40x their revenue because they had this one particular banking license or in partnership in the US that no other company had for a long time. And I think now maybe some other companies are starting to get to it, but that just gave them an insane moat that helped them get through the early innings. And in the fintech space, often once you have a wedge, it's very hard to disrupt you. So I definitely think that regulations can help, but it's much more complicated than like a yes or no. Regulations are defensible always, or you need IP too. I think it really goes down into what is the regulation giving you? Where is the moat? When will that end? And are you in a space where that's enough of an edge or not for a long enough period of time?
There's some questions related to sort of fundraising from some GPs sort of in the audience here. Maybe the biggest one, since both of you were founders, like what would you say is like the biggest difference between sort of like raising money for a startup and raising money for a fund? Maybe Garrett,
I
start
can
with
I
you.
can I can take that one. I think when you're in a startup, it's truly about kind of the whole opportunity, right? The whole kind of business plan, the product, the market. It's this more of a clear path in many ways. You can show how you can de-risk. You can show how there's certain milestones. You can say, I need 10 million to accomplish these three things, and this is how I'm going to do it exactly. In a fund, I was surprised because it is really a blind pool that you're betting on, right? We don't know the investments that we're making, and so much more of the uh, LP base is about believing in the GP, right? And the as opposed to maybe the whole part of what the founder can offer, including the company, right? It's like founder plus company plus, milestones and kind of value creation, right? That's what, as a traditional investor, that's what at least I'm looking at. But when you're a GP, and even if you do have a track record as a founder and angel investors like Nathan and I, both have, they're still, LPs are still looking at you as, does this person have what it takes to source and select and service these companies? And so, I think it's much more relational in many ways, and I think it's more challenging in certain ways, but other ways. You can also show that you've demonstrated success in the past. So it's definitely been a learning curve for me.
What about you, Nathan? What are your thoughts?
Yeah, I mean, I think Garrett hit on some of the things I agree with. Like, I feel like people have, I remember fundraising for one of my startups, and people I barely knew wired me like 50K pretty easily for this startup. I had a good reputation in the space. They liked the idea. It was easier for them to just kind of get involved with less trust in me. As a fund manager, the trust in the person is so high. So I just want to echo what Gareth said there a lot. Sorry, I don't know why I said Gareth. Garrett.
It's all
what
good.
Garrett what Garrett said. It's a lot about believing in the team and the GP because you are investing in a blind pool. I do remember actually for my first investment, I had people who just wanted to invest in that and not the fund. And so you have to find people who actually want to invest in your process and your thesis to get them into the fund. Otherwise, you can launch a individual investment through SPV or something. What else was I going to say? I don't know. I think that's definitely the part where I agree with Garrett is that like the individual trust is really big. Oh, that was the other thing. It's such a different game in that, um, you know, there's just very different things you need. Like, and they're a little bit more common. Like access, I guess access can be different for different industries. But I've almost never had a LP conversation, a serious one, where they weren't thinking about how do you have really good access. And so that's something that's pretty different than when you're running a company. No one's like, hey, do you know the best founders in this space? They want to know if you can do the project. So I think that's another big difference.
Totally. I can't agree more. And then there's also kind of sort of a follow-up question in this, like kind of where did you like how did you find LPs on a high level? Do you guys want to sort of talk about that a little bit? Maybe like, like how did you go about this process? I don't know, Nathan, maybe we start with you on this.
Absolutely. So yeah, I mean, joining VC Lab was a big part of doing this for me. I'd say a couple of the things that I did was reach out extensively to my network and ask for feedback on what I was doing. I think I tried to get to about 15 calls a week at the beginning of my fund, and that was extremely helpful to kind of iterate what was working, what wasn't working. I would say, a lot of people are going to be people you've interacted with in the past. That level of trust that we talked about is really high. And so for someone to trust you with their money, it's more likely they have a relationship with you before. To be honest, I'm still cracking that second degree level. We're getting people involved who are know me less well. I am also trying to do that through using something that the VC Lab suggested, a 501c approach where I can be public about it. Although to be honest, I still haven't completely taken advantage of the fact that I can say I'm fundraising. I gotta circle back with you, Mike, after this call and double down on how we do that more. But
Yeah.
I think being public is going to be interesting about being able to fundraise. And it's still a work in progress. I've made some progress, but I still have a good way to go.
What about you, Garrett? How did you go about
I
finding
I I
LPs?
I echo what Nathan said in terms of many most of my LPs, almost out of the 10 or so we have, I'd say 8 out of 10 are people that I've known, and they know me, and they've kind of known me as a person, right, and also kind of seen the work that I've done in the past. So I think for those that are thinking about doing a fund, I think the earliest money will probably come from those relationships. And I'll just say that I had a couple early LPs that were friends, but also very accomplished, and that really helped me kind of get over the edge of jumping in as doing my own fund. So it was kind of, that was nice to see that early support. So I think I just wanted to point that piece out. Um, like Nathan, I'm now moving into more kind of serious LP discussions with family offices. We have a corporate venture fund that actually has wired money, so we were able to get support from an entity that did not necessarily know us at the outset. And so I think it is there is a element of trust that you have to build with these larger institutions that I know, Mike, we've talked about this before. But I think that it's really important to leverage those personal connections in order to build and get to know other LPs that may want to also invest.
And just to kind of double down, Nathan was talking about like how I think several LPs were like really trying to drill into like, does he actually know his stuff? Basically, like, what is like your real sort of like domain, like edge? Curious to see, have you, I'm curious, I'm sure you've had some of these as well where they kind of like drilled in pretty hard on some of your stuff. You want to sort of talk about some of those experiences, if any?
Sure. Yeah, so I think access comes up a lot. So, Wycan, in particular, there was a family office that really wanted deal flow. Like, we're largely focused in San Diego and the Bay Area, so they wanted to know, well, how can we exactly, get into deals that nobody else has seen? I think they were attending other of these kind of med tech angel events, and they wanted to know that they would be seeing different deals in the region that they wouldn't see in other areas. So we were able to point them to the fact we're embedded in the San Diego ecosystem in various ways. So I think that showing that access is really important. And then I think another thing is just the expertise to show that you have, going back to the operational track record, they've dug into, like, have you helped similar companies in the past, right? What's gone well? What hasn't gone well? And so I think being open about not only your successes, but also your failures or what your feedback that you've learned, I think that's also important.
Nathan, were you going to comment on this as well? I saw you on mute. That's the only reason
I'm just getting over a cold, so I was just coughing on mute.
I asked. Well, speaking of questions here, Jeff's asking, back to sort of this whole AI thing, do you see that like 70% of startups are just like rappers? And how do you sort of raise above the noise? Nathan, what are your thoughts?
I mean, there are definitely obvious things, but those are not the hard ones to catch. The things that I think, are real questions that people, lose sleep over or are scary is the unknowns, right? Everyone talks about what large, model companies are building, and nobody actually knows. Like, they get inspired by what other people do. It's interesting to see OpenClaw explode, and all of a sudden, Microsoft is now releasing lots of OpenClaw like features. So what might be on their roadmap today might not be the same as tomorrow. And as code gets easier to ship, they can change gears more quickly. So yeah, it's definitely something to think about. Proprietary workflows. What are things that won't ever get sort of taken? How does their AI getting better help you? How do you build proprietary data? Regulatory IP modes, the things we talked about. These are all good questions. And again, I don't have all the answers. These are just the things I'm personally thinking about as I look at companies. And I guess the other thing too is you can overthink this, Mike.
Yeah,
You
I
can
agree. You can
you can
get
kind of
paralysis
like,
by analysis, right?
yeah, or like
Yeah.
never make any investments because like they could eventually get one-shotted. But like, what's interesting is like there is just a wide world of business that is much bigger than you often think of. And as like the non-AI forward companies get more interested in this stuff, they're going to want to, find these different companies and work with multiple people and have multiple partners. So it is possible to like way overthink this too. And I'm seeing one of my startups right now. They are like starting to get all this interest from non-AI companies. And so even if like something happens that disrupts part of what they're doing, they're going to be entrenched in a lot of these systems. People who aren't going to be so tech savvy and so tech forward, they're going to want to be switching a lot. So I think it's a balance. You don't want to like not do anything because you're thinking everything could be disrupted tomorrow.
Just maybe just some advice for the founders, and maybe we can just start with you on this one, Garrett. For the founders building like today, they're starting today. What has become like more accessible in like starting a company, and where do investor expectations feel higher than maybe they did a year or two ago, if at all?
To think about that for a second, I think that I think that with AI, right on the AI bandwagon, that I'd expect to see way more de-risk company presented at the early stage, meaning you can use AI now to write a business plan like that, right, or dig into a market like that. Or so if I don't see a company, if I see a company today that does not have one of the, there's about 15 different components that we look at in the fund, and if they haven't really dug into it at least you know to a level that it shows that they've seriously thought about it using an AI tool, then I kind of question how serious they are about the business. So basically, I would expect the business to be a lot more de-risked now because simply AI can do that. So that's one. And I also think that there's a lot more technologies that are out there now. There's a lot more marketing of technologies from universities. So you see a lot more earlier technologies. So I guess I'm saying that because there also needs, it ties into my first point, is that there really needs to be a good business case that's tied in with that early stage technology.
What about you, Nathan?
Yeah, I kind of agree with Garrett to some degree that like AI is making so many things easier that I'm a little bit less tolerant of like especially like the pre-idea kind of pitch where, like, why haven't you got a prototype? Why haven't you done X, Y, or Z? These things, like I could build a prototype your company by tomorrow. Like, so those are things where I feel like I do want to see some shifts. It is interesting to me how some founders still are pitching ideas and looking for money versus like early prototypes. I personally am a little bit less excited about that. It does make me wonder how AI forward they are and if they're going to continue to embrace that. Um, what else am I seeing that's different? There's different edges, like distribution is suddenly, sales and distribution are suddenly, you know, some of the most important things that I find. Like one of the things I was trying to do is I say, is this business going to be one on a technical edge or a distribution edge? And the number of technical edges I'm finding in the companies I'm looking at are fewer than earlier. And so if distribution and sales are more important for my companies, how are those founders being part of founding teams? How are the people who don't have those skills learning those things? Those are all things I'm really interested in. It's actually interesting too. They're now like doing a lot more IRL stuff. They're overlapping as VCs. We're hosting a lot of events and community, seeing a lot more companies now in the same space that I'm in, trying to host these dinners. And so it's interesting to see how people are shifting to this kind of world where distribution is more important.
So would you say that you're saying that well, on the technical side, it's pretty hard to sort of like differentiate because there's just so much stuff there, right? So much investment there. But really, there's been a bigger like trend on sort of go to market and distribution as like a moat for the company, and that's a trend that you're seeing lately.
A huge trend I'm seeing in the SF AI space is that a lot more people are focused on GTM, sales, marketing. That's like the theme of a lot more conferences around here than it used to be. Everyone's trying to talk about that, figure it out, who wasn't spending as much time on that before. Yes.
Yeah, I agree. I agree. It's tough, right? Like especially if but if you can get distribution fast enough, then you can actually build a pretty good moat, right? Because you've got the network effects and everything going. So very, very cool to see. Look, one of the questions that we always ask on Meet the Managers, right? It's just like, you know, given what you sort of know now, and I know this is hard, but what advice would you sort of give yourself when you were sort of first starting out and launching a firm or fund? And because you've been doing this for a while now, and it'd be really interesting to kind of hear your perspective now. And maybe Garrett, we could start with you, and then we can also wrap with Nathan on this one.
Sure. So as a first-time founder, uh, I think it was easy for me to want to hold on to the whole pie, right? You want to run with your, in my case, my technology or my invention, and keep as much equity, and so you can, for whatever reason, have control or financial gain. But I've really learned in my career that it's important to think of the big picture and how you can really grow things by bringing on the right people and by incentivizing the right people. And so I've learned that both as a founder and also as an investor, and just thinking of the, like, how do we make the most impact possible? And that's really by, I think, building the right team and being willing to bring on the right people, and not be so focused on just controlling the company or the equity. So I think that's something I've learned in my career.
Yeah. How about you, Nathan?
Hmm. I love what Garrett said. I'm inspired by that too. Finding
Yeah.
the right team is super important. Let's see, what else would I like to know day one of starting my fund? I think that um, looking back, I thought was going to be hard, but it is a long journey. So just mentally preparing yourself for that. I would also say building really strong community, especially I'm doing a solo fund and a solo GP fund, and so how do you can do the fun part solo, but how do you work together with a lot of people? How do you have a great community? That's something that I'm still working on, and I think on day one we got a lot of it from VC Lab and having a cohort, but I think I could have even been more intentional about that when I started. It's just how do you make sure that as you're going after this, you're continuing to bring along the group of folks who is going to help you the most.
Amazing. I'm super inspired by both of you guys, and it's just been such an honor to like spend this last hour with you. We spent a lot of time together, like talking and stuff, but like it's just really cool to sort of just hear your story. And also, thank you so much for sharing it with the community and with everybody here. I know I've learned a lot. I'm sure a lot of the other people here on the call have learned a lot. And this is how we do it here at VC Lab and Decile Group. We basically try to make sure we bring ethical managers together so that they can sort of share their insights so that everybody else can be really, really successful. One call to action for me, everyone, cohort 21 is starting on May 28th. So apply now. The sooner you apply, the better. We get roughly several thousand, up to 3,000 applications every time we start one of these cohorts. And that just gives you a lot more time to sort of process it and do all those different things. So um, just wanted to say that, and just want to say thanks, Garrett. Thanks, Nathan. Super appreciate you all doing this with us. This was really, really great. All right, everyone. Enjoy the rest of
Thank
your
you,
day.
Mike.
Bye.
Thanks.